Three stocks that, in my personal opinion, are super undervalued and why you should consider to buy them in September. As you might know, the seasonality for September can be always tricky, but it's always a great idea to buy undervalued companies, okay? And why those three companies are super undervalued, in my personal opinion, and why this is one of my favorite series here actually on the channel, and I'm sometimes forgetting it. I think this is worth a like and also a subscribe if you want to not miss any further of those videos. So let's dive in. Okay, the first company that we will talk about is Eli. E-L-Y. That's the ticker symbol for Callaway. Callaway, if you ever have golfed at one point of time, you heard about them. And even if not, you went to Topgolf, then this is the same company. Actually, they bought Topgolf for, I would say, very, very, very cheap, okay? Topgolf itself is this crazy new experience where they take entertainment and drinking and having a good time with food plus golfing with a driving range into a super amazing experience. It's like going for bowling, but you do actually golf. And this is the main reason, or one of the main reasons why I really like this company. I actually had a small bet, financial bet on the earnings, and just before the earnings, the stock went higher and higher. And I was within a few days plus 30%. And afterwards, I never seen something like that. But the stock was after the earnings, which was fantastic, plus 7%, and then when the stock market opened, it was -4. So I had to sell my position. But however, I really believe for the long term, this company is fantastic, okay? I mean, only Topgolf, if they will expand, and they will expand because it's a fantastic experience, then you have here a company that is valued only $5.4 billion, while Topgolf itself wanted to maybe considering before the health crisis to go for an own IPO for $4 billion, guys, okay? So you have a company in a company that was almost valued at $4 billion company, and all the other part of the business is even very, very strong as well for those who are knowing them. They have like this wearing clothing brands like Jack Wolfskin and are the leading company for all the premium golfing equipment. Okay, let's have a look what the stock actually did over the last couple of months. So you have seen here obviously the big dump in the March 2020 time, but since then we could almost grow 600% because everyone was crazy about golf. This is actually also the recent highs in June of this year, where the stock reached around 37. They reported, as I said, great numbers. You can look them up, really record financial numbers, and still the stock lost about 22%. So I think it's a great opportunity to buy a really strong company with now a new product or a new business line that will expand, that will bring much revenue to the business. So I think it's quite interesting, so check it out. Okay, we had the AI day, and I love Tesla. I have also a little bit of Tesla in my portfolio. Tesla was my big shot that made me financial free. Financial freedom, financial free. Anyway, it's one of my big investments, and I still believe this company will be huge if they just continue this road. And they had the AI day, which they showed us that they will have an own AI chip, which is fantastic because this is a kind of trend that you see, Apple with their M1 chip in their MacBooks, Tesla also started with this full self-driving chip that they created because the Nvidia chip was not good enough, and so on. So you see the trend. And then obviously they came with the concept of a bot, Tesla bot, that will not only help to build the cars but also will make groceries for you, or will build this first city on Mars. Now this is quite interesting. For many it's sci-fi, especially when I remember like 2 years back or 3 years back when I talked about Tesla, and many were laughing about it. And now look at them, right? The cars are driving almost by themselves. You know, the company is huge. They deliver over $30 billion in revenue every year, and they're growing like crazy. So I really, really like this company. It's like exponential growth as per textbook. So this is something that you should consider. Let's have a look at what this stock is actually doing. We had, let's say, over the last couple of, months or the whole year was somewhere around, $800, $900 on the topper level, and on the lower levels, we were at around 560, 500-ish. So, in this kind of, let's say, area, the 33% area, we are currently balancing, a little bit sideways, but slowly up since about May, right? If you look at May, and since then, we gained like 21%. So I think like it's definitely something to think about long term, okay? I think the company obviously needs now to perform very, very well to, be a 5, 6, 7, 8 trillion company. But if you consider, for example, Rivian, right? Rivian, the company that Jeff Bezos has also invested, actually will do their IPO and will be valued, I think, like $20 billion. So this would basically, if you take the same parameters, Tesla would need to be worth around $7 trillion. Okay, so it's how to say, it's sometimes not really comparable, because Tesla is this huge, great innovator. They are now having also the license in Texas for selling power directly to consumers. So you see here everywhere where you look at Tesla, there's innovation. So if I really recommend one stock for somebody that really want to start with this, technology trend, then with Tesla you can do nothing wrong. So, and let's get to the last one, 3 of 3. As you know, I love consumer companies, I love technology companies, and Peloton is actually one of them. I invested into Peloton with about, less than little bit less than a double-digit amount of my portfolio, and I really like the company. Okay, super amazing product. I think very futuristic. I think great management, lots of money in the bank, and so on and so forth. And actually now, and this is sometimes the chances where you can dive in. I have like an average price of around, I think, 80 or 70-ish. You remember back in last summer, I said, I am investing into Peloton. And since then, I bought a little bit more, but it's a small position, but I really like the company. So I really recommend to look into it. And suddenly they had a drop, okay? As of this recording, which is Monday before the stock market opens, you see that Friday we had a drop of almost 9%. A tenth of the company just got wiped out. Why? Because of two reasons. First, they didn't have so great earnings as expected. They beat on revenue, they didn't beat on the earnings itself. So this is, one point where the market is like very picky currently. And on the second point, they want to reduce, or they will reduce, the price of the bike. And I never saw a problem. There was also one point in time where Apple also reduced the price of the iPhone. I think it was around 2014 or something like that. And everybody was shocked and, oh no, what's with the demand? But this company, guys, there is so much demand for this in the future, and they are building a great company. So I really like this company. I think this is a great opportunity to go in with a 10% discount. I don't know how long it will take to bounce back, because the all-time high is somewhere at 170. So you have still, $70 to go if you consider those 100 levels. I think with a $31 billion market cap, this is totally valued, let's say, rightly or slightly undervalued. But if you consider the whole opportunity that is in front of them, definitely undervalued. I really love the company. And that was it.